All right, boys. So right now we're back testing different RRs with different methods of reading the market. Okay. So we're still using retraces on the 5 and the 15-minute time frame, right? Even deep full candle body retraces like this one. Obviously they're not preferred, but you can still use them if you get like proper, whatever it's called. It's not manipulation, but proper deliverance candles, right? So I was testing this one. This one we actually did get a proper 5-minute delivery, and basically I was testing right now I'm mostly testing 1 to 3s with half body stops. So basically it looks like this, right? So we get that deliverance candle. In this case it's an inversion, and then if we put the stop at half of the body, right, how often is a 1 to 3 gonna hit, right? In this case it hits, right? Now if you, let's say you put it about like a third of the body, right? That's a third or a little bit less than a third. A 1 to 3 is like absolutely hitting on this John, right? Clearly, right? So 1 to 4 would hit too. But as of right now, I don't know when you would want to put it at a third body, at a half body, and then how are you going to know that a 1 to 3 is a good RR for that position, right? So I'm still trying to figure that out. Let's just see. For the inversion, if we zoomed in, there's not much that we can honestly see. And they're just bullish candles, right? So I'm still testing this, guys. I love retrace inversion trades, but you know, I want to diversify. I want to see what else there is. So let's see. This is going to be a little back testing video. Too much consolidation there. All right, so here we bounced off of this 5-minute. And then I'm pretty sure we got an internal inversion right there. There we go. Very wicky though. So in this case, that's fine since the wick happened on that candle, right? Because that's a weak inversion. I would wait for stronger confirmation, which we get in the following candle. So that is a clean inversion. So we put it there. And then if we did, let's say a half SL, right? And then putting your take profit at the wick would be safe. But obviously you want to test the win rate of 1 to 3s right now. So, I mean, that hits cleanly, and then we move back up, right? So actually, as you can see, if you put your SL, which is not a bad idea, at the wick, it wouldn't have played out. So, right. Which works for us because right now we're testing 1 to 3 RRs. So this hits, boom, immediate displacement, and then for some reason, price doesn't come all the way to the bottom of this wick, and then rips right back up. So that is interesting. Ah, man, I wish like these armrests were lower, bro. Okay. So now we're riding up. All right, cool. Shot up. Don't really care. It's under the 5-minute. We're going to continue here. All right, swept some low resistance liquidity. Yeah, barely. Not too interested. So let's continue here. Are we going to retrace? Beautiful retrace. So here, retracing this 5-minute fair value gap right here. Probably going to get an internal inversion. On the 3-minute, okay, cool. Okay, so we invert it with the second candle. So if this was real time and I'm like, okay, I can clearly see that we're not going to invert this in time. I'm going to go down to the lower time frame. And then, so that 1-minute inversion was inside of the retrace, where 1 minute is a bit small. So let's disregard that. Yeah, so it's all right. I mean, A 2 candle inversion is weaker than a 1 candle inversion, but it's still an inversion. So here, wait, I just need to make sure it's the full candle. It's not. Yeah, so that's a massive candle. Unfortunate, but it's okay. We can still get a good entry. We just have to see where the liquidity lies, right? So we are inside of this gap right here, but I'm not too worried about it. Obviously nothing really up there, right? So right now it's looking pretty safe. Okay. Right now it's looking pretty safe. Great displacement. Should we test a half body? Let's test a half body, right? So here, let's see. Yeah, nothing should be a problem with this one. Okay, never mind. So this is a massive 4-hour fair value gap. But yeah, so we're currently in downtrend actually. So that changes everything. Let's still see how this would play out, because this is quite interesting, right? Okay, so this literally plays out perfectly. Oh, whoops. That played out genuinely perfectly. Right. So 1 to 3 RR. We smoked that. As you can see, price kept climbing here. 3-minute gaps. Big 5-minute, 15-minute gap. Just climbed all the way up here for a 1 to 6 RR trade. That's insane. Excuse me. So if he actually entered that with the half stop, because you see in this scenario, obviously you wouldn't have held it for 1 to 6 because you're in this entire gap, and it's very unlikely that the whole range is going to get filled. Here, right? It's like, doesn't matter. 4-hour, 15-minute, 5-minute. They all have big gaps here. So like at most you would take profit right there. Right. If you didn't know the 4-hour gap was there. Unless you're a risky trader. Which I'm working on my discretion, which mixes risk and safety. So let's just say I was ballsy and I was like, okay, half stop 6 RR trade. Let's lock this one, boys. Oh, come on. Uh-oh. There we go. And then we enter into this crazy trade. We're like, okay, riding up, you know, boom, boom, boom. Crazy. And then we just smack that. Like, wow, that would be crazy, right? But obviously, that's not high probability 70%, right? That's like 50% or less of the time. Especially since there was bearish gaps in our way, which we broke through, but that's not always going to be the case, right? So this is very interesting. It definitely seems like half stops are safer than third stops right now. Okay. I don't want this video to be too long. Hopefully we won't go over 30 minutes. Let's see. So go here. Is that a 15? Yeah, it is a 15. Okay, perfect. Right there, baby. That's what I'm talking about. High time frame retrace. And then we get that beautiful. Just making sure that's a full 5. Yeah, it's a full 5. Okay, full 5 right there. We're going to test the half stop one more time. 1 to 3. Let's see what we're dealing with now. Okay, so it's already protected. Cool, so nothing should be in the way. We're trading slightly into this 15-minute gap. That's chill. Let's see what happens. All right, cool. So this one would have played out for a 1 to 2. Nice. Obviously, if you let's see. What would a third stop look like? Is that a third of it? That's about a third of the candlestick, yeah. So like if you did slight adjustments here. No. You could have got 1 to 3, but yeah, I mean you could have got a 1 to 3 right there. That's pretty chill. It's like, it's that sweet spot, you know, of knowing when market is going to react well for a short period of time before retracing, and then you're capitalizing on those moments. That's pretty cool, honestly. 3-minute inversion, 2-minute inversion, 5-minute inversion, ultimately. Let's keep going. And then obviously, let's just see. Ripped. So there. We're moving up. It's very clear. A slight downtrend, but overall we're in the uptrend. So we're going to see where this takes us. Another 5-minute rip. Let's see what this would do. Is it going to follow the same pattern? It's hard to say. Very close. So that one, let's see what that one was. Just another 1 to 2. Beautiful. Okay. And then just oscillation at that point. So if you guys don't know, I trade inversion or retrace inversions as my continuation setup. And I also trade liquidity sweep inversions as my reversal setups, right? So 2 setups, very similar. Same idea, just the first confluence is different. So this is slightly different, obviously. So we're getting some oscillation here. I want to start getting into CISDs and like understanding that idea because it makes sense, but I don't practice them because I don't use them. So I don't use them in live markets yet. Let's see, no retrace there. That's a small retrace. I don't like it when a retrace is that small though. Oh, I would prefer it to be more substantial. I'm sorry, not the retrace itself. The gap. The gap is just small. We created a bit of consolidation, but clearly price reacted well to this fair value gap. It pushed lower, filling this whole range. All right. Reacting hard. All right, so just a massive retrace. A bit of consolidation. Consolidating, but we are continually creating this downtrend, so still going. All right, we've reacted off of something. Nothing on these time frames, but something caused price to go up. Would this be a fair time to say that you could place a safe bet on a market reversal. Let's see. I don't know. Those are pretty big bull candles, but then again, we're oscillating downwards. But this is different though. There's a space here, and this run is much larger than these bullish candles. The question is, what would I be even looking at right now? The 1 minute's too messy. Let's see. I guess the majority of bull candles is a good sign. It's just unfortunate that we're not tapping off of anything on the 15, the 1 hour, or the 4 hour. No, it's just not my strategy, bro. And like at this point, I would be expecting a retrace already, so I wouldn't even want to enter. See, like this is good. We created a gap and we're retracing this. See, this is good right here. Let's just see if we get any like big displacement. I mean, that's pretty good displacement. I can't lie. Let's see. If we got, see, like, we reverse this whole range with one candlestick, I feel like that's pretty solid, honestly. So let's just say I was feeling confident here, and I'm like, okay, that's a great candle. I'm going to put my SL at the previous wick, and then just aim for a 1 to 3. Let's just say that's what I was thinking. So I would get stopped, and then price would just chop around. I see. Okay. So yeah, inversions are the safest bet. Oh, that's not the only factor. Right now, it's 6 o'clock Eastern, so kind of a weird time to trade. Not gonna lie. How long has this been going? 17 minutes. Okay, cool. We'll do 13 more minutes. So oscillation. Okay. We're going higher. We just need a nice reach. Okay, there we go. So we're filling this range. We're retracing down. Okay, the wicks. Okay. That is a deep retrace. Holy moly. The one, you see, the thing is, bro, I could start expanding my strategy to 1 hour and then 15-minute or 30-minute inversions. Like, I don't know. We'll see. Right now, I'm really trying to just grind the 5 and the 15-minute. Alright, well, it didn't even work anyway. So we respected this 1 hour bearish gap. Wait, what's going on here? This looks like a, I don't know, this looks like a character or something. Anyway, I continued to trade. Okay, sorry. And then I got a call from the Big Ben. Okay, I'm sorry. My voice is not good right now for Trump impressions. Don't flame me in the comments, please. I swear I have a pretty good one. And it's 1 a.m. on this backtesting, so I'm not tripping, gang. I'm not tripping, yo. Yeah, so low-key, we're just gonna go boom, boom, bam on the Johnson. There we go. Put that bad boy to there we go. That's what we're doing. Okay. So here, uptrend, if you know what I mean. Okay. I mean, technically, a little 5-minute ski. 2 in a row, which is crazy. I guess it's not a bad thing. So we grab that. Is that the whole? Oh, yeah, that's a big candle. Okay. But then, oh yeah, it's a big candle though. That is a 1-minute inversion. I just don't know if like that's a good inversion to take, cause I'm a new trader. Okay, well, it is what it is. I'm still trying to figure out how to backtest, guys, cause I don't want to inflate my backtesting stats that don't reflect my actual trading in the live markets. But I also need to give myself confidence in my backtesting so that I take trades in the live market so I can get experience. Because if I don't do that, I'm never gonna get better as a trader. So I just need to find that balance. See, that's crazy, bro. That's got to be some sort of news drop that happened at that time. Like, I would not enter on that, bro. I would not enter on that, bro. Bro, like, if you did enter on that, you're a demon and you just made like 20x. So hold on, I'm trying to figure out, like, there's got to be a way to catch these moves. There's got to be a way. There's got to be some confluence that you can use. So clearly not on the 3-minute ski. The 2-minute ski, it's okay, but it's still very big. So that's another 1 minute. So honestly, if I'm being honest, I know someone took that 2 candle deliverance right there. But then, like, what even is, and they clearly they realize that this is a big bull run, like they can tell. So they put an itty bitty stop. And then I don't know where they would have put their TP at. But like if it was up there, there's 26 RR. So obviously your TP should be right here. That's not only is that a high, but that's the start of this fair value gap. Right? So TP should be here. I don't know why you would have held it up there. That would be crazy though. This is actually really good for me. Because it helps me understand the volatility in the markets, right? And then I can understand, and you guys who are watching this can understand, obviously, as I post more videos like this, that it's all about your strategy. And if you like having an even RR, high win rate strategy, then that's great. That's great for consistency and discipline. That's less gambling prone, of course. But if you're also into high win rate, bangers capitalizing off of either news or just big candles, you know, just big bull runs, big bear runs, having a tight stop, right? And maybe taking one trade a week or 2 trades a month, and you just like doing that instead, then that's great. But you have to be able to know how to identify those trades, because those trades don't come often, right? Those trades come way often than just a regular 1-to-1 70% win rate type of strategy, right? So you have to understand it, and the best way to understand it is to just backtest. So that's what we're doing, honestly. So we got the 5-minute retrace here, tiny tap, and then the huge delivery to the upside. Okay, for sure. Okay, let's go. So obviously we're in this gap. We retrace here. Okay. Retrace. We get a big push up. So here. Oh my gosh, bro. That's insane. Okay, I didn't even know it was gonna happen. All right. Anyway, let's just say that you have a lot of trust in patterns and behaviors, right? You're a market psychologist, so you're like, okay, that just happened and it just happened again. So you zoom in, you put a tight stop, and then I don't know where your stop your take profit would be here. This is crazy. I don't know what was going on this day. This is definitely not typical. Okay, so 34 RR is pretty nutty. So if we go on the higher time frame, yeah, a little bit of the gap is left. Most of it's protected by this big wick right here. So I'd say it is pretty safe to put a higher take profit. I don't know exactly where your target would be. Maybe the beginning of this new gap right there. But I don't know. Let's just say, let's go back, honestly. Let's just go back for a second. Oh, that's perfect. Okay. So let's say you were thinking, you're one of those traders, right? You take 2 trades a month. You know what you're doing. You're like, all right, clearly we got this 5-minute retrace. On the 1-minute time frame, we got this huge delivery leg, and then your take profit would be somewhere. Let's just keep it where it's at already for demonstration purposes. And then you watch as market delivers through your green zone. And it just keeps going up. It just keeps going. You can't believe it. And you're such a good trader because you make $100,000 in one trade, and you do it consistently. Like, wow. I wonder if anybody actually took that trade in 2021. Oh, that would be so crazy. Wow. So how long has this been? 29 minutes. All right. I'm going to end the video now, guys. Thanks for watching.